Yo, what's up guys? It's your boy Looney, and I have been selling options weekly, monthly, consistently, and today I want to give you the truth. Yes, it can be consistent income when it works, but there is a dark side to selling options, and that is when the market changes direction, it can actually flip against you real fast. But before we get into this video, quick shout out to the Discord. It is free to join, and then I also offer a premium membership that's $8 a month, and it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links that are in the description. But yes, there is a good side to selling options, and that is what I do a lot of the time. Let's pull up Mara because I have a bunch of going on with Mara, and we'll look at another stock as well. So when the market is stable and I'd say slightly bullish or just bullish overall, selling options feels like free money, especially cash secured puts, where you're collecting premium week after week or month after month, depending on what expiration you are doing. And yes, this does add up. So that's why so many people get hooked on selling options. And when stocks are range bound, you're just farming income while holding shares you already want to own. So let's actually pull up what I earned from Mara. So if I go all the way down here and I scroll down to my realized profits, and I have this set to all. So Mara, you can see, is one of my biggest gainers. I'm up 2,600 just from selling options alone, selling cash secured puts, selling covered calls, collecting that premium, letting them expire worthless, or possibly rolling. And I have a few credit spreads in there mixed in, but for the most part, just selling cash secured puts and covered calls, where on the other hand, with Mara, I'm actually down 8%. So essentially, I'm owning these shares for almost $0 because the goal is to get to 3,000 with just selling options, and therefore I'll own these shares for essentially $0. And I'm doing this with a lot of different stocks. I have Riot I'm selling options on, but Riot I'm not doing cash secured puts. One is Oscar. Oscar is another stock that I am selling cash secured puts on. So I have $4,000 in cash collateral. These are all out of the money, which is very good, very ideal. And hopefully I collect these premium or realize the gain of these premium. But a part of this I did not talk about, and this is the truth with selling options, is it's not always that easy. It's not always as just free money. And especially right now, the market is super hot, whereas just buying and holding stock is actually better than selling options. And therefore, my covered calls are actually struggling. A lot of my covered calls are deeply red or in the money or deep in the money. And unfortunately, I'm constantly having to roll them up and out. And sometimes with that, I'll have to pay it. So this means more management, more time, and sometimes giving up future upside just to keep my shares. So this is why people say you're just collecting pennies in front of a steamroller. You're making small wins, but if the stock rips in the opposite direction, those wins can vanish. And again, this happened in April with the other side, with the market heading downwards. A lot of these cash secured puts were deep in the money, and I had to pick up shares at prices that were at the time high. But looking back, it's not a bad time to buy. But yes, a lot of my positions are deep red. If we let's look at Riot and SoFi, because those I have covered calls, and those are the ones that are really struggling. So I have a bunch of covered calls. I have 8 going on, or actually 9, because we'll get into after this video, after this part where we talk about other strategies I'm looping in with covered calls. So that's why I have 9 covered calls. And yeah, these ones I'm constantly have to roll. They're all in the money. And yes, they do have high break even, so I can make a profit or realize a gain with rolling these options. But most of the time, I have to pay to actually roll these. Just for this one, for example, I actually did realize a profit. I realized a profit of $300, but this time around, I'll probably realize a loss of $140 or close to that price. Let me try and find one where I actually had to pay a bunch or realized a loss. This one, again, I realized the gain. And then let's look at this one. Let's see if this one had a realized gain. Another realized profit. So I guess all these are realized profits. But Okay, another realized profit from just rolling. And that's why rolling is important, because even if it's not going in the way you want it, if you just simply keep rolling, eventually you'll catch up to that stock and you'll end up making profit. But let's actually look at SoFi, because SoFi is one that I have been rolling and I had to pay the price when rolling. So I have 5 covered calls. And again, when I went to go roll them, I had to pay $900 just to roll them. And that's really unfortunate. Now, this one is in a better scenario. I am still below my break even. So if all things go well, I'll realize a profit of $1,000. So therefore the net of the two, I'll actually be profitable. But you can see that covered calls can go wrong, or selling options can go wrong no matter what direction you're doing. And that's why you want to make sure you're choosing the right deltas, and you have to be very strategic when you're selling options. Ideally, you want to sell puts when a stock is oversold, or just the overall market is kind of oversold. And then on the other hand, you want to sell covered calls when the stock or the market is overbought. And yes, the market is overbought right now, but it still can rip through higher. But you could use indicators. I like to use RSI and Bollinger Band. So if we look up Mara again, and let's go to this advanced chart, because I have one share or one contract of covered calls still going on with this stock. And I did a monthly one, so we'll look at the monthly chart. And I have the Bollinger Bands going right now. And when I did them, it was towards the top of the Bollinger Band, or it exceeded that Bollinger Band. And if you guys don't know, this is also a time where RSI is high, where it's saying it's overbought. I also like to show the MACD. The MACD is kind of a trend or where it's heading. So MACD in this scenario wouldn't actually be as helpful. But in this scenario, yes, it was showing signs of overbought levels. So I sold a covered call, and I sold it at a really high strike price of $21. Hopefully I don't exceed this, and then I could roll it, or whatever I'll do with that. Maybe I'll even sell off the shares, but I've learned my lesson. So with this strategy, I only did one contract, and I still have 100 shares that I'm just letting appreciate. So if it does go past that $21 mark, I don't miss out as much, because I actually own a separate 100 shares that aren't covered. And with that, you could combine various different strategies. So I like to do put credit spreads, debit call spreads, and leaps. So let's actually look at HIMS. HIMS, I don't have any cash secured puts on, but I do have a credit spread. And essentially, I'm saying that I think HIMS is going to stay above $37. And if it does, I get paid $29, which is pretty good in just a month. And I only had to put up $200. So very cheap strategy, or very low cost. And it's very beginner level in the sense that you don't need a lot of cash. But with this strategy, it's a little bit more advanced in how it works. It's very risk defined. So I will probably close this early, and I won't actually gain or realize a gain of that full $29. And same way with, I will close it early if I'm in the red. But as of now, it is looking good. And then back to my SoFi plays, yes, a lot of my covered calls were red, and that's why I wanted to catch that trend. So with that, I decided to open up a call debit spread. And this is a very bullish strategy. And again, a more advanced strategy. This isn't a selling strategy. This is actually a buying strategy. So I like to mix in buying strategies every now and then. And with this, I just need SoFi to stay above $23, and I get a realized gain of $75, which is pretty good, because I only put up $200 to make this trade. Again, a very low budget strategy. And I like doing this when to hedge, really, or being strategic when it looks like the trend is going upwards, or SoFi is just pushing up. There's not really any bearish sentiment with going on with SoFi. So to catch that uptrend, I decided to do a call debit spread. And then again, the leaps, this is a long-term play. I didn't really do this to hedge, but this is a bullish strategy, and I simply bought it when everything was really deep red or really bad in the moment. Like Riot was super red, and I bought this back in May. May was somewhat bearish. It found some support back in May, and that's when I started to do this leap call. And this one is actually up 117%, $468. SoFi, on the other hand, I didn't do this one at the best time, but again, this one is still up pretty significantly, up $900 or 121%. So yes, selling options can be very consistent and build you strong wealth, but you have to be very strategic on what you're doing or when you're doing it, because it's not free money. It does take management, and it does take timing, and overall take strategy. So Sell when conditions are right, hedge with other plays, and always be prepared for that steamroller scenario. Until next time, peace.